By way of introduction, my name is Joe Akiki and I'm one of the directors at Akambo. For the new faces in the room, I'm sure you'll get a much better understanding of Akambo and what we do through tonight's presentation.
So what we're going to do tonight is break the night up into sort of 4 parts as we run through investment strategy, what you should have in your portfolios, what we think about portfolios, what we think of the world and what we think of the things that are interesting in the world. And then Chris is going to run through portfolio diversification, ways that the Akambo Investment Committee and the investment management team think about structuring portfolios. When you look at investing in companies, really what we're trying to do is invest in future earnings. And the future earnings for companies has never looked any stronger. The last 6 quarters, US companies and global companies report their earnings every quarter, whereas in Australia, companies report their earnings every 6 months. Growth. One of the things that when people ask the Akambo Investment Committee about the portfolio, what's it most leveraged to? It's most leveraged to companies that are looking to spend money to make themselves stronger, better, more efficient. The growth in China, the growth in India, there's been good growth in Europe. So we've had that synchronised growth across the world, and it's very uncommon to get that synchronised global growth to the extent we've got it. It's been driven by the US, but now it's permeating across the globe. Interestingly enough, when we construct our share portfolios, one of the key things that we're doing is making sure we're buying companies that don't have a lot of debt. Microsoft, Google, Facebook, they don't have any debt. They've got net cash at bank. The US is the place to be invested. It's got all the tailwinds, the corporate profit growth. It's got a reasonable political environment, but we just want to make sure our portfolios are leveraged to that CapEx cycle because that's where we're going to get all the growth. And that's where we are getting the growth. We've got the growth. And that's why the Akambo portfolios performed so well last year. So in me summing up, volatility is not all that bad. Volatility provides opportunities. If you look back historically at volatility, markets have still done well when volatility elevates. You do need to be a bit more selective. You'll probably notice a little bit more turnover in your portfolio, but this year we think volatility will be higher, markets will be higher, and hopefully some good opportunities will present themselves.
Disruption is a constant theme, and that drives change. It drives change in businesses, it drives changes in consumer patterns, consumer behaviour, spending patterns. And this change is driven by, as I said, disruption. So we're going to talk about a theme called robotics, automation, artificial intelligence. The industry is growing quite rapidly. 64 billion in revenues for robotics, expected to be 1.2 trillion in 2025, so we're talking big numbers there. And as investors, I'm not just talking about the disruption as consumers, but as investors, there's clearly an opportunity there. We look at the companies that have got a proven track record, strong revenue growth, etc. And we do believe that rather than invest in an index, even though the Australian index goes up over a long period of time, bottom left-hand corner, the top right-hand corner, we think it's better to individually pick the bigger companies that are going to be exposed to those particular themes. Healthcare we've touched on. Healthcare is an interesting one. We talked about life healthcare and some of the exciting things it does. What we do at Akambo is we invest across a range of assets in proportions or in risk profiles that are appropriate to an individual investor based on your need for income, your tolerance for volatility, your need for growth in your investments, how long you expect before you retire. All of those things we factor into consideration when we build a risk profile for you. One consistent theme across these portfolios though is that we'll always invest in large household brands. That's quite important to us because what we run, I refer to these portfolios, Australian shares, fixed income portfolio, international portfolio. We run discretionary portfolios across each of those asset classes.